and today's plays as well. Okay, so I think we're ready to get started. Good afternoon. This is Ifan from the Strategic Day Trader, and this is your market wrap for August 28th, 2019. Qs up 0.36% after gapping down a little bit initially, and then the SPY up 0.69. Okay, so we're looking to see if we got follow through to the downside. If we broke down, got bought right back up. So coming into today, neutral, wanted to see if we were going to come in to give us a bearish bias, but they got bought right back up. So we kind of had an inverse of what we got the day before, which is we tried to explore higher and that came in. So where does that leave us going into tomorrow? Just inside of this consolidation. That's what we've got. Okay, so just basing out here, we're going to use the range from the last couple of days to be our guide. Okay, so let the charts tell us when to be bullish. So that's going to be over to 90 and on the SPY, and then underneath 287 there will be bearish on the Qs over 186.42, and then underneath 182.90. Okay, on the Qs and SPY. All right, so neutral going into tomorrow. We're still stuck in this really sloppy range here on the Qs here. If you even wanted to zoom out even further and just use this as your gauge, use this as your area of support, you definitely could, and just stay neutral in between. We've been following the hourly chart, and the hourly chart, as you can see, hasn't really been able to follow through one way or the other. Okay, so we'll continue to use the hourly, make adjustments as we need to. We may get a breakout and no follow through, or a breakdown, no follow through, because that really has been the kind of environment that the market is in. There's just a lot of stuff chopping around, not getting a lot of follow through. And so it's not that individual plays aren't getting follow through, but the market itself seems to have yet to pick a direction. So if you want to zoom out even further, you could. I'll continue to use the hourly to see if we can get some kind of continuation, but there just really hasn't been fluidity and continuation to this market. So, but that's fine. We just let the market kind of guide us, and just treat every day as we would, and read the charts. Okay. All right. So let's get into something from yesterday, which I just wanted to clarify because I misspoke on the NVTR. I said it was a 5-minute 1-2-3, but was in fact a 15-minute 1-2-3. Okay, so I just wanted to clarify that because if I'm giving you the wrong time frame, and then I don't think I'm really providing as much value as I should be. And I want to make sure that we go over the patterns, right? Not just to say, oh, look at this play and you could have made all this profit, but so that we get the eye training that we need to constantly reinforce, right? To understand the patterns so that we can recognize them in real time. Okay, so I just want to go ahead and go over this to clarify this from yesterday, because I said it was a 5-minute. It in fact was a 15-minute. Okay. And so here is the definition. Okay, I have a 1, 2, 3 here. If you would like to pause and get this down, you can, but we're going to go through this entire definition kind of point by point here, right, just so that the pattern here is clear. Okay, so quality or the aspect of this, number one, is that we have a bullish 2020 bar, meaning that we want it to open in the bottom 20% and close in the top 20%. This, with this topping tail, is pushing it a little bit. Ideally, we want it to be as close to the top as possible. Okay, so what that means, in other words, is that we want the body to make up, a green body to make up 60% of the bar. Okay, and then we want bar 2 to stay in the top 1/2 to 1/3. The more that it stays up here, the better, without taking out the top. Okay, sometimes you'll get patterns that will take out the top just by a little bit, right? And so that's okay too. Okay, but primarily we want it to be an inside bar in the upper range if we're talking about a bullish one. If it's a bearish one, then everything is kind of flipped. We want it to be a wide range red bar, and we want the inside bar to stay at the bottom. But this example, we're looking at a bullish one. Okay, so we want there to be evidence of strength. We want selling to step in a little bit and show us what kind of strength they have, right? But to also make it clear that this doesn't want to come in, okay, despite the selling. All right, we already noted bar 2 must be equal to or near the high of bar 1, and then would be even better if this is a red bar. That gives us more evidence of selling, but this topping tail also is a good representation of that. Okay, and then the way that it's played is over the high here, over 207, and then the stop is 194. Okay, so you play it as it breaks over this range, and then stop goes here. On a smaller time frame, you just have a breakout, okay, because this inside bar represents consolidation. On a smaller time frame, it's going to be resting in there, and then you get the breakout and the continuation. Now, why is this kind of a pattern that comes late in the move, right? Because in order to form that 15-minute wide range bar, you already had a nice move up. It rallied out of this space down here, and so you are kind of late in the move, right? But rather than just say falling in or just jumping in, right, you wait for it to rest a little bit, and that gives you that inside bar and then the breakout. Okay, so I'm really glad someone pointed that out, that I characterize this as a 5-minute instead of 15-minute, because I want to make sure that you know, when I go over these, we go over the patterns, that they should be reinforcing the right things rather than being confusing. Okay, so yeah, 15-minute, here's the 1 bar, the 2 bar staying in the upper half, right, inside bar, and then the continuation. So you can see the move has already started. A lot of people already bought this thing, but the 1, 2, 3 allows you to get in with some kind of measured risk. Okay? All right, so that is the 1, 2, 3 pattern. Can be played. This is the bullish 1, 2, 3, or as a bearish 1, 2, 3. That would be on a bearish symbol that's putting in a wide range red bar. Okay, so hopefully that is clarified now. So let's go over the play from today. Just had one play on the EXPR. Thought it was a pretty sloppy morning as the market gapped down and was getting bought. I only had one play here, and that was on the EXPR. That's why I'm also coming on a little bit late, just because this one we were in it until the end of the day. So this was a 5-minute breakout here. Okay, we based for about an hour and a half. We broke out. It didn't want to follow through right away, but our stop was here at 215. Okay, and then we were looking for 230. We basically got it here, and we took half at right under 229. And then we were holding until the end of the day, and so we just got out of it. So not a big play here on the EXPR, but not too bad either. Okay, so that was really it. We just was in it kind of for the whole afternoon, waiting to see how far it wants to go. I did note for the room that I thought this was a little bit on the aggressive side. We are working against this downtrend on the daily, but I did notice that there was some bit of void here to work with on the hourly, that we had cleared all this consolidation here, and I wanted to see how close we could get to 240. We really didn't get there. We did get to 230, our initial target, but I wanted to see if we had more follow through. This also was gapping down initially in the morning and then flipped the gap, so it did end up gapping up just a little bit. So that I also like kind of to add to the kind of power of this play. But I think, you know, as far as a weekly downtrend, a daily downtrend is not what I want to make a habit of playing against. Okay, so as much as possible, like the TME yesterday, like look at this TME. Yesterday we played it weekly in a downtrend. Monthly is just failing on this buy setup, looking like it's and looking to come back down to the lows. Or even better was the FL on Friday. Look at that, monthly, right, starting to break this area. Weekly also looking lower. So these, right, I think are much more clear in the time frame alignment. I do think that the EXPR was a little bit aggressive, and I think it's important to make that distinction, not just on plays that don't work, recognizing why they're aggressive, but even on the plays that do work. I think just to be objective, I do think it was a little bit aggressive, but it was as good as anything else I'd seen today from what I was looking for. And it was just a high of the day base breakout triggered right there. It didn't quite get going. I did mention you could have done an ad, but the ad wouldn't have been able to add much here as it got back over the highs there. So just a little play, just kind of sat in it all afternoon and wanted to see how far we could ride this. Closed at the end of the day because this was intended to be just a intraday trade. All right. So that's going to do it for today's market wrap. Hope you did well today. Maybe be on the lookout for some more 1, 2, 3s now that we've gone over it and you know what the definition is, especially if you see a big move up or a big move down, you didn't quite catch it. Maybe it gives you a 1, 2, 3, an opportunity to get in with a well-defined stop. Okay. I wouldn't be surprised if kind of as the week goes on and even in the next coming weeks, there are like less and less gaps, lower quality gaps, more thin or spready names. So just make sure that you're assessing risk appropriately, okay, and that you're aware of that. We don't need to, I think, be as aggressive as we were the last month just because I think the quality of opportunity will go down. Hopefully not. If the market picks a direction and starts moving, I think that'll give us a lot of opportunities as day traders, but we'll kind of let those come to us and see what happens, all right? So we'll see what the market brings us tomorrow, and I'll talk to you then, all right? Have a good evening.